The stock market isn't just a place for people to make money, it's an indicator of what's going on in the world. It was only a matter of time before tensions between Russia and Ukraine exploded into something much worse. This video is about how the stock market reacted to the invasion of Ukraine by Russia. Welcome to Money Invest. If you're looking to optimize your personal finances to the max, then subscribe to the channel and give that notification bell a smack. That way you'll get a ring whenever a new video is in. While the world was anticipating that Putin was posturing when he dispatched military personnel to Ukraine's borders, Putin proved everyone wrong. He attacked Ukraine. This is devastating news for the planet, and such information might easily cause the stock market to plummet, especially since Russia is one of the world's leading oil and natural gas suppliers. Oil prices have remained relatively flat since 2011. Oil has been predicted to peak, and no one thought it would grow much further. Because of the epidemic, the world was on lockdown at the time, so demand for oil plummeted to its lowest point. However, in a single day, oil prices rose over $100. Some people don't care, but with record inflation rates, rising oil prices mean more inflation. It's not just about rising prices at the gas stations, but the price of oil affects literally everything you buy. Everyday items are going to get more expensive. The stock market is a clear indicator of how the economy is doing. When it falls, that means that something is wrong. It's not just one thing, it could be 1,000 things, but when the stock market falls, it means that people are worried. And they have good reason to be. Putin's invasion of Ukraine could lead to World War III. The stock market reacted immediately, with the Dow Jones Industrial Average, DJIA, plunging 350 points. The DJIA is a measure of 30 large American companies, and it fell to its lowest point since February. The S&P 500 and Nasdaq also fell, with the S&P 500 dropping 2%. This invasion could have a devastating effect on the world economy, and it's only going to get worse from here. We've already had a severe supply chain issue. It was one of the driving causes behind the 7.5% price inflation rate, and now consider if we add an oil crisis on top of it. Inflation may rise by double digits, which might be catastrophic. The question is, how long will this scenario endure? Since the middle of summer 2021, Russia has been amassing troops on Ukraine's borders. The United States top officials warned that Russia is getting ready for a full-scale invasion, but most people didn't believe it, since a war in the heart of Europe in 2022 seemed far-fetched. It doesn't matter, because it's already taking place. The main question is, why? Why is Russia attacking Ukraine? The answer is actually quite easy. Putin has been in office since 1999. Since 1993, he has repeatedly stated that the Soviet Union's collapse was the century's most significant geopolitical catastrophe. Since then, he has been strategizing to restore the Soviet boundaries, including Belarus, Baltic states, and Ukraine, as well as Central Asian nations. Russia, on the other hand, found it difficult to attract them economically in a capitalist world. The Baltic nations joined NATO and integrated with Western nations. Belarus, on the other hand, had a love-hate relationship with Russia. It's close to Russia since they have a similar culture and language, almost. It wanted to be independent and closer to the West, unlike Belarus. Ukraine wanted to become a democratic European country distinct from Russia's ambitions, but Russia had a different vision. Ukrainians were furious that Russia established a puppet in their country. Ukrainians were given the option of signing a trade agreement with either Europe or Russia in 2013. What do you think he picked? He decided to sign with Russia, since he was financed by Moscow. Ukrainians demonstrated on the streets, and Ukraine and Russia have been at war ever since. Crimea was initially annexed by Russia, which has continued to provide aid to separatists in Donbass, generating a lot of instability within Ukraine. For the past 8 years, Russia has been itching to seize the remainder of Ukraine. While comparing military might, Russia is considerably more powerful. It's not simple, however, to capture the biggest country in Europe even if it isn't economically or militarily strong. The invasion of Ukraine began in Belarus, which is much closer to Kiev, the Ukrainian capital. The question is, how long will the conflict last? Russia expects a rapid and decisive victory. A few weeks, if not longer. Ukraine's gas supply is entirely reliant on Russian supplies, so cutting off Ukraine from Russian gas would cause the country to freeze over for an extended period of time during winter, which could have a devastating impact on military morale. The fundamental problem with conflicts is that they make the future unpredictable. When investors keep their money on hand, it reduces market demand and drops stock prices. That's why the market has been gloomy for the last few days. We had already anticipated a recession, but with increasing oil prices, the downturn may get even worse, particularly if the Fed raises rates in March, which is expected to be during the war. Despite the fact that the stock market does not accurately reflect economic activity, if the economy does not improve, the markets will take a hit. The worst-case scenario is stagflation, in which the economy stagnates. It's when the Fed raises rates, demand declines, and prices continue to rise due to the energy crisis. People will have to spend a larger part of their income on necessities, which will reduce demand for other items. This will lead to rising unemployment, and the vicious cycle will continue. There's not much we can do in the short term, but hope that the situation improves. Russia has been heavily sanctioned, and it's had a negative effect on their economy, but it's not enough to stop Putin. The sanctions need to be increased, and they also need to be imposed on Ukraine's neighbors who are helping Russia. There's still a chance for a peaceful resolution, but it's looking increasingly unlikely. The stock market is a barometer of the world's economy. When it goes up, that usually means things are good. When it drops, that means there are problems. This video takes a look at how the stock market reacted when Russia invaded Ukraine. It's fascinating to see how global events can cause such big fluctuations in stocks. I hope you enjoyed this video and learned something new about the stock market. If you did, please like and subscribe to our channel so you don't miss any future videos. Thanks for watching.